Welcome back to the show, everybody. Check out these headlines. Lightning Network in trouble. Jamie Dimon, addressable market size. Sologenic buying a broker-dealer. MICA regs in Europe tap into $330 trillion market. USA tokenizing the debt. And is XRP the USA secret weapon? I think so. And how about November 9th? It could be the biggest day for the SEC versus Ripple yet. We got that and so much more. Somebody roll that beautiful intro.
Digital Perspectives with Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on YouTube and Twitter for exclusive content. Right now, we're looking at private equity, the best private equity in the world, ladies and gentlemen. Don't believe it. It's still true. It's linked to, click the link to my sponsor below, invest in leading startups with affordable minimums, broadening investment opportunities for all. And we love that. And I tell you what else, too. Don't forget about the first ever commercial space station. Yeah, Axios, right? Let's take a look real quick here. I think we could take a look at that. 1 second here. Yes, it's Axiom. Axiom, I tell you, is building the first ever space station, and what an amazing moment that's going to be in tandem working with NASA. This is the kind of opportunities that are cutting edge, ladies and gentlemen. You could be a person who is investing like your own VC. You become your own VC. I tell you, I'm so excited about it. Click the link below and get started, no doubt. All right, now let's take a look at the numbers real quick. It's $1.17 trillion market cap for crypto. The market is up 0.7%. Bitcoin, 29,800 plus. Ethereum, 1,600 plus and change. Tether market cap, 84 billion plus right now. XRP is 51 cents, off by 0.3 on the 24-hour. But it's actually up 5.9% on the 7-day. Now, ladies and gentlemen, if you have not joined us in the Freedom Zone, click the link to join the Freedom Zone for less than the cost of a cup of coffee per month. This is a way that we can guarantee that we stay in contact with one another. And believe me, we are having conversations that I wouldn't dare have on social media because of the censorship that takes place out there. And today, we're going to have a very real serious conversation about what is happening to our country, the United States of America. Who's really running it these days? Where are we in this? Can we save it at this point? The 100-year plan, we're going to talk about it. Make sure you join us, and we're going to do that right now. All right, well, there you have it, and I hope you guys enjoyed that. Make sure you click the link to find out more. It's one hell of a story mounting up in there, ladies and gentlemen. You're going to want to know about it. And here we see this. Talk about a story mounting up here. Ashley Prosper shares this. Where will you move when the Bitcoin Lightning Network fails, asking Max Kaiser. Going to the island, the E Island. Well, this came out, and this is breaking here from Whale Wire. Says one of the top Bitcoin developers recently discovered a massive security risk in the Lightning Network, which triggered him to announce his departure from the project. It says right here, after writing the mail reply on the economics and sequential malicious replacement of honest HTLC timeout, I did write one more test to verify the behavior in the core meme pool, and it works as expected. Responsible disclosure process has followed the lines of hardware issues affecting operating system as documented with Link's kernel. While adapted to the Bitcoin ecosystem effect now, I am halting my involvement with the development of the Lightning Network and its implementation, including coordinating the handling of security issues at the protocol level. I informed senior Lightning devs in that sense before. It says close the very old issue, which was affected to me at this purpose on the Bolt repository here. He says, I think the new class of replacement cycling attacks put Lightning in a very perilous position where only a sustainable fix can happen at the base layer. It goes on and on and on, right? So this is looking to be a problem here. I'm not a developer, so I can't confirm it. We're just reporting on it. We want to stay on top of this to find out, because we know that there are obviously people using this, but we also want to find out before the financial institutions get deep into trying to use this as well, if it's not sound. And that goes for any protocol. And here's JP Morgan, Jamie Dimon here, CEO, fintech company, has done a great job some of this stuff we could have done ourselves as it looks quite critical. And we acknowledge that. Take a listen.
With respect to fintechs, now that we see a very different macro environment with money being much more expensive and growth opportunities not as evident as a few years ago, do you still think that fintechs have much to disrupt or innovate in financial services?
There are hundreds, and they've spent tons of money, and they still have tons of money. And I don't like talking about as a group. Yep. Some have done a great job, and we should acknowledge that. Some have done a great job. I wouldn't call them a fintech. There's something that a company came up with, which is fintech type services.
Yes.
Some have some of the stuff that we could have done ourselves. And I think a company should be self-critical. Mm-hmm. We could have done ourselves, and we didn't. They beat us to it, or they simply did it better. And so we should acknowledge that.
We should acknowledge that. Oh yeah, boy, I tell you. But let's keep moving. I don't want to get my needle stuck. Then I want you to hear what this gentleman says about MICA implementation date set for Q4 of 24. Once regulation like MICA comes into play, we could tap into $330 trillion worth of market capture. Take a listen here.
Maybe Maurice, we are very positive, although we talk with institutional clients, we are very positive.
Institutional clients?
Here in Europe we have MICA, the new regulatory environment that is coming, and this is very powerful. From once, Europe is more advanced than the US. And this is very important. We are going to have custody regulation, we are going to have marketplace regulation, we are going to have infrastructure regulation. This is huge, and we should take advantage. We should not avoid going to the regulator and say, look, I'm building this, what do you think? We know already what they are thinking. So let's go there and try to build things that are compliant, and we can tap into these $330 trillion.
That's a big deal, but we're not done with it yet. Listen to this here from the GBBC here. Listen to what they say about addressable market size. $1,700 trillion market size set to be tokenized over the next several years, ladies and gentlemen. It's massive. Take a listen.
This chart won't be a surprise to anyone on the call today. It really tries to capture the mammoth size of the market opportunity, addressing more than 1,700 trillion in assets, which are likely to become digital. Digitalization of all the world's assets, traditional markets, adoption of cryptocurrencies, and the tokenization of real world assets. This is the size of the addressable market, and this is the market in which we see a huge opportunity to participate.
How about that?
Now, Archax really is very well positioned to capture that market growth because we really sit between and bridge the traditional and huge opportunity sets, traditional markets, adoption of cryptocurrencies, and the tokenization of real world assets. This is the size of the addressable market, and this is the market in which we see a huge opportunity to participate.
There you go, ladies and gentlemen. That is Archax, right? Essentially at the Global Blockchain Business Council telling you what the addressable market is here, right? And then we're going to hear this right here, which is Bob Ross from Sologenic. Shout out to him. And I tell you, this is pretty powerful because we know what Sologenic's doing, tokenizing securities. And they say right here, they're in the process of buying a broker dealer. Take a listen.
So we actually changed the idea a little bit. So right now, there are two aspects that we are following. We have two goals at the company that we are following right now. So one goal is we have created Sologenic, which is an institutional tokenization solution, allowing financial institution to bring any asset classes. It could be securities, it could be real estate, it could be commodities on chain. So that's basically our institutional solution that we already released that, and we are in touch with a few big players. Just try to get them adopt the technology. From the other side, in terms of launching our own tokenization platform, we are in the process of acquiring a broker dealer firm. We are looking, basically right now we are at the due diligence step. So,
which is good. And he goes on to say that it will just be a pilot to begin with, obviously, so regulators can take a look at it. But this conversation is happening on NASDAQ, right? So big things are coming. We are absolutely at a turning point. And speaking of a turning point, I want you to listen to this clip here where Emmanuel Daniel talks about tokenizing debt and says the U.S. is most likely jurisdiction to do it. Take a listen.
Economy looks like. I mean, just to put that in perspective, basically what I'm saying is that we are now entering a global economy where the only way for states, for any state, to be able to issue debt indeterminately is to digitize it. And to make it available to as many investors out there as possible. And the state that is most likely to do that out of desperation more than anything else is the United States. So that
there you go, right there, ladies and gentlemen. I have been saying this since before I had a YouTube channel, and I know a lot of you are probably tired of hearing me say it as much as I said it. Tokenizing the debt on the XRP ledger is one of the best ways to provide a floor price for the asset itself. Period, full stop. Just like the information that we learned about the DTCC last week, on the same day that the case was dismissed against Brad Garlinghouse and Christian Larson, we know that the DTCC settles over $2 quadrillion worth of securities derivative products every year without fail. Ripple, Stellar, Ethereum, EOS, and other distributed ledger protocols will be used to settle those digitized, tokenized products in the future, using those protocols and more, right? Understanding tokenizing the debt tells me that there's an opportunity here because we do have a two-tiered financial system. I currently see it now, and it could change if we get more information. They could do a wholesale CBDC, begin tokenizing the debt, establish that CBDC at a certain denomination price on the back end, and you have quite the system to repatriate the physical dollars to that digital wholesale CBDC on the back end. And basically, you're issuing new bonds off of that new CBDC. Isn't that right? Which is tokenizing the debt. That's how you do it. Then there's this. Quite an interesting clip here. Listen to what David Schwartz says about the challenge of the dollar if it doesn't stay with the technology. He gives the same analogy that we've done here for years about the music industry and what happened to the music industry when they thumbed their nose at the technology of digital file sharing and streaming services. Take a listen.
Things out of the Fed. The United States has geopolitical issues with the popularity of the dollar, and if the dollar lags behind technically, that could become a factor pulling against adoption of the dollar. So I think they're going to be in kind of the position that kind of like what happened to Sony as they watched digital music happen. Like they're like, we have a solid position here, and we could lose it to technological innovations. And we would love to sell CDs forever, but if people want digital downloads, then we can't let Apple become, which could be China in the analogy, or any of the countries that would like to usurp the U.S.'s role.
That's right. They would like to usurp the U.S.'s role as the dollar world reserve currency. No doubt about it. Now, look, with that being said, this is where we're at. This is the moment we're in, and we're getting ready to get MICA regs coming very soon. The United States, I believe, has always been in a position where they're going to move last because they're the largest economy in the world and because the dollar is the world reserve currency. And when they do make a move, it will be swift and it will be quick when it happens. I do believe that. Now let's take a look at this. Speaking of swift, the SEC versus Ripple case has been everything but. But you know what? Nevertheless, it's been 3-0, Ripple winning, undefeated so far, and I think they will remain so. But looking right here, you can expect something important to happen, says Flip the Chain here. If you look at this, the SEC and Ripple intend to meet and confer on a potential briefing schedule with respect to pending issue in the case, what remedies are proper against Ripple for its Section 5 violations with respect to its institutional sales of XRP, and respectfully request until November 9th, 2023, to propose such schedule to the court, or if the parties cannot agree, to seek briefing schedule from the court on a contested basis. So watch out for that date and more information to come from that. But let's hear about this. Bill Morgan says, based on Jeremy Hogan's post, which we're going to look at that thread in just a second, he doesn't see any obvious appealable error other than in Ripple's favor in respect of ODL sales, which don't meet at least two prongs of the Howey test. The SEC's prospects of success on appeal are very slim, and I feel generous today, so I am giving it 3% chance of success on appeal. Well, let's take a look at that. Shout out to him for that. And this is attorney Jeremy Hogan right here. We're going to get a look at what he says on this thread, which is amazing. He says, for all intents and purposes, the Ripple versus SEC case is over. Yes, important hearings will be held in the coming months. Deciding a judgment up to $770 million is, of course, important, but your time and hand-wringing over this case is done, in my opinion. He says here, the SEC dismissed the rest of the case, so there will be no trial next year. The facts have been set. Nothing new or surprising will be coming out, which means the court will be issuing a final judgment probably sometime next year. Only Ripple needs to worry about that. The case could, of course, settle any time before the final judgment is entered. That's one possibility. If not, both the SEC and Ripple can file appeals. The SEC has indicated that it will appeal, fair enough. So, statistically, what are the chances of winning on appeal? And here he says here, luckily we have statistics which tell us, as you see below, the SEC has a 14.2% chance of winning on appeal. 14.2%. And I think it's fair to say that the manner in which the judge wrote her opinion, very fact-based, at a minimum, does not increase that chance for the SEC. And so, what happens if the SEC appeals next year and the appellate court sides with it in 2025? This is why we love Jeremy here. He walks us right through it. Because of the way the judge wrote her order, the appellate court would have to send the case back down to the trial judge for further judicial findings and determinations. Read on. He says, as to other distributions of XRP, you can see in FN 18 that the judge did not make findings as to her second and third prongs of the Howey. Only the trial judge can do that. So, what would the judge rule? Who knows? But you'd have to think there's a chance she would rule for Ripple, knowing she's already done so, right? Same thing with programmatic sales. If the appellate court agrees with the SEC, it would still have to send the issue back down to trial for court further determinations. It says here, suggests that the judge has given some credence to Ripple's fair notice defense. Then you have here, then after the judge makes a second round of judicial determinations, it can then be appealed again for appellate court. Now with all issues ruled on, and only then could the SEC win on appeal and leave with a victory, unless Ripple appeals to the Supreme Court. So, the SEC has to, 1, not settle, 2, win on an appeal, 14% chance, 3, get through more hearings, 4, win on another appeal or something like that. And that's not even taking into account a possible act of Congress, a change of political regime, or something else I can't think of. So that's why I say, for all intents and purposes, this case is over. Unlike on TV, a lot of legal cases end with a whimper and a drag on for a year after the main issues have been locked in. And I think that's what we will see here. P.S. I just learned about emojis. There we have it, ladies and gentlemen. He says, I've now done the math, and taking into account the chance of a win on appeal, surviving more litigation, and still being able to maintain the lawsuit against Ripple into 26, the chance of the SEC winning is exactly 2.367%. Same odds as the Jets winning the Super Bowl. There you have that right there. That's not financial advice from me, him, or anyone else. It's just our digital perspectives. And I just want to give a big thank you to Jeremy Hogan, John Deaton, Bill Morgan, James Filan, and everyone else out here, Fred Rispoli, there's so many others. I want to thank all of you so much for what you do. We could not have kept up with what is happening and still happening in this case if it wasn't for each and every one of you, especially John Deaton representing over 75,000 of us, right? I mean, pretty amazing. We are a special, special bunch. No question about it. I'll catch all of you on the next one.